How seriously are you taking this Bitcoin rally? Is it something that materially changes your investment thesis around Bitcoin?
So we are not anti-Bitcoin. We see Bitcoin as having a potential purpose in portfolios for those clients who want to engage on that discussion. We wrote a piece right before the election saying that if Trump won, we should fade some of the major elements of the Trump basket. Perhaps we didn't expect the Trump victory to be as clear-cut as this. We would say Bitcoin is one of those assets to be fading.
Is it a threat to other assets, though, like NVIDIA, for example, things that retail investors got very excited about?
So I think the most important thing to focus on with this Bitcoin rally right now is that this liquidity is sloshing around the global system in ways that will continue to drive markets. You saw it with the moves we saw in early August with VIX going to 65 and the Nikkei selling off 10-15% on almost no news. You saw the 23% rise in the Chinese equity market on 3 days. This isn't normal market fundamentals driving markets. This is liquidity sloshing from one area of the market to another. It's going to continue to have an impact on the margin. And so, you know, both positive and negative. So this is an example of something we'd fade. We do want to have exposure to equities. We're overweight the broadening theme in equity markets in the United States, at least through the end of the year. And things get more complicated as we move into 25.
You said liquidity is sloshing from one area to the other. Where is it sloshing from exactly, especially at a time when Trump is both pro-Bitcoin and pro-dollar? How does that work?
Well, it's sloshing from a lot of other currencies. It's sloshing from, you know, other bond markets and whatnot. It's sloshing from cash. There's a lot of excess, you know, cash sitting out there. So, you know, we think the dollar can continue to rally. We think that a lot of these trends will be in place at least through the end of the year. But then when you move into 2025, you have to start reevaluating the playbook. The obvious trades, which are playing out, some of which have fully played out. We've had a nice run in financials. We've trimmed that back. It's important to remember, in 2017, the first full year of the Trump administration, the dollar actually sold off after having rallied late in 16. Why? Because the Chinese stimulated aggressively, in part. And we could see, you know, elements of that in 2025. The Chinese right now have engaged in a certain amount of stimulus, mostly focused on risk management, truncating the kind of the left tail in their economy. They're holding fire to pursue additional stimulus. I was just there a few weeks ago. Folks on the ground there, what the stimulus they appreciated was the cash for cars, old cars and old appliances, cash for clunkers. More of that and those types of stimulus efforts can have an impact.
Okay, and we'll see if we get evidence of the impact of that in that data that comes out on Friday. We're getting a question from a viewer about US financials, and I think you hinted at this. Is this another part of the Trump trade that perhaps you also fade?
We have faded that. That said, you know, that specific element, that said, we think there is a more durable broadening out of market leadership in the U.S. market. And frankly, in 25, that probably begins to extend more globally. And so we do want to participate in that broadening out away from the Magnificent Seven towards, you know, down the cap spectrum in terms of you know, mid cap, small cap, the other 493 stocks in the S&P 500, and with a bias towards more cyclical and value-oriented stocks.